Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group. Of course, I am joined with my partner and great real estate agent, Abe Safa, also with Century 21, the Harrelson Group. And we are here discussing what's going on in the Myrtle Beach real estate market. And just want to thank most of you who are constantly watching us week after week. We appreciate the feedback and the comments that you share with us. So Abe, thank you again for joining me.
Yeah, Greg, another week.
Yep, another week and some more data. So why don't you let's just kind of start off with I know that the market seems to be I'm going to call it plateauing or stable. There's not a lot of movement up or down. Seems to be very healthy, very active. Why don't you just kind of kick us off and bring us up to speed with the numbers? I know there might not be much of a difference over the last couple of weeks, but what do you have for us?
Yeah, I mean, it's pretty much, I want to say normalize or stabilize, however you want to call it. There hasn't been much change. The one surprise still, and we kind of touched on this last week, is we're just not seeing the inventory grow like it's supposed to.
Yeah.
So that's still a really good sign. Single family homes are still very strong. Over 40% of the homes that are out there on the contract, so they're still pretty active. Condos are still kind of doing well. Oceanfront condos are softening up a little bit. Just a couple of months ago, we were at around 41% pending rate of what was out there. Now it's dipped down to 33% roughly. Wow. Of all the oceanfront condos that are out there under contract. And then it's not an increase in inventory. Inventory is about the same. It's a decrease in pendings relative to where we were about 2 months ago. That's really the only thing that kind of been a significant change, and everything else has kind of been pretty even, steady.
Yeah. I tell you another thing, Abe, because I think one of the things that is confusing is like, okay, inventory levels are low. I know it seems to be flattening, but it's flattening and normalizing at a very low rate. Right. And, there's more and more builders. Have you noticed there's more and more builders that are building homes for rent? Meaning like there's like one of the national builders in our market. This is the first time that I've known that they've done it in our market. Within one of their new development communities, they're building, I think, 50 homes that all look the same. And they're actually building it and selling them all to one big REIT. And they're just going to be rental homes. So, some of the, inventory, when people say, well, gosh, where are all these people moving? They're all coming in, but Abe and Greg keep saying that there's no inventory. Well, when it comes to population growth and people moving in, what's for sale is not the only inventory that they move into. They're also moving into rental homes, rental condos, rental apartment complexes. If you look in our market, the number of apartment complexes, they look like humongous condo buildings, but they're really apartment complexes. The number of apartment complexes in the last 5 years to pop up in Myrtle Beach has been extraordinary. And then you have the mini homes. Those are the homes that are really small, but they're homes. Most of those are not for sale. They're rentals also. And then now you got some builders that are national builders are starting to dedicate a certain portion of their builds to rentals and selling them to publicly traded companies that's what all they're doing is buying rental property. So, it's not like we don't have places for people that are moving in to live. It's just that there's so much available in competition with the rental market. Now, that's probably a savior for us because at least there's housing. But for us, when we talk about the inventory, there could be a difference between inventory as in number of houses being built versus number of houses available for sale. Two totally conversations. I know we haven't talked about that, and I don't think we need to go deep into that because we want to talk about insurance, but it just came up. It's just in my mind.
Yeah, that's a good point, Greg. I read something about that a couple of weeks ago, and a big chunk, this is national too, it's not just Myrtle Beach. Yeah. So nationally, the big chunk of new construction that's out there are not being built to be completed soon that's going to hit the market. A lot of it is multifamily. A lot of it is apartment buildings. A lot of it is just multifamily, multiple homes, things like that. Yeah. So it's not individual single family homes for sale. There's still a big shortage of that nationally.
Yeah. And the reason I bring it up is because we're constantly, I'm praying every night that the builders are going to come in and just provide all kinds of inventory, and it just doesn't seem to happen. It's surely not happening overnight by no means. So let's shift gears, and we want to make sure that we're very current and very relevant to our audience, and talk about things that are going on in the market right now. And we've touched on it a little bit. I did a video on condos, about what's going on in the condo market with insurance. But it's becoming a problem. So why don't you start off by, let's just share with everybody what's going on.
Yeah, this is a big deal. This is probably the biggest deal that I've seen in the market, maybe even since I started real estate, right? So what's happening right now is insurance companies, for the most part, don't want to insure coastal areas, or at least trying to minimize their exposure to coastal areas because of hurricanes, because of natural disasters and things like that. So less and less companies are actually wanting to insure on coastal areas. And this is something we're feeling, across the board. Florida started feeling it a little bit earlier, like towards the end of last year. And now we're starting to feel it. So every time an insurance policy comes up for renewal, okay, with these condo developments, whether it's on the ocean front or off the ocean front, they're seeing their insurance premiums skyrocket. Like I've seen stories where 300%, 400% increase in insurance policies. And we're not talking like these are big policies. Like one owner I spoke to today, last year's policy was $500,000. This year came in at $2 million. I mean,
That's on a condo building?
On a condo building. I mean, that's significant.
I just had one yesterday that I listed the property for the seller, and their building insurance was $500,000 a year, and now it's 2.5.
Yeah,
that's 500% increase. Their HOA fee. Now there's another issue with this building too, and we don't name buildings, but there's another issue with this building. That's with some assessments, that their HOA fee is getting close to $1,700, is about what it's going to be once they start factoring in this increased insurance. Yeah. That's what we mean when we say, it's causing some problems. That's going to be problematic for a lot of people.
Yeah, the reason that it's problematic is it's across the board, Greg. So it's not specific to that one building. I mean, I got another owner that just got hit with a $3,700 assessment. Okay, so if they're paying $350 a month in HOA dues, and now they have to pay another $300 for the insurance extra on top of what they were paying, I mean, that's significant. So we're seeing it across the board. Every single condo development that's coming up for renewal is starting to see that. Now, luckily, some of them were, the HOA was managed pretty well to begin with, so they had some reserves, or at least they kind of anticipated this coming, so their assessment wasn't as high, or their HOA didn't go up as high. But some of them that weren't expecting it, I mean, they're getting slammed right now. So I think this is going to be pretty significant as it starts to spread throughout the condo market.
Yes. And Abe, let's not forget this. I think we have the tendency to talk about the condos because it's like, seems so crazy to think that it went from 500,000 as an insurance policy to 2.5 million. But the same thing's going on in the residential market. Same thing's going on in the commercial market. And here's a concern of mine, or here's just something that I know people are not prepared for. Okay. So if you take people that purchased a property 6 months ago, purchased a residential home in our market 6 months ago, when insurance rates were what we think now were reasonable. That person purchased a property, they got a mortgage, and they escrowed their taxes and their insurance. When we helped them buy a property, they got pre-qualified and they were able to afford, let's just say $1,500 a month in payments, or $2,000 a month in payments. That included taxes and insurance and their principal and their principal. So principal, insurances, and taxes. Now, in 3 to 4 months from now, which means now they'll be 6 months into their new home, they're going to get a notification for their insurance company. They're likely to get a notification from their insurance company that their taxes went from insurance went from $1,800 to $3,200 on a residential home. Mm-hmm. Now they were qualified for the loan and they were budgeting based on $1,800. Now it's hypothetically 3,200. When Abe and I are saying, hey, this is going to cause some problems, there's people out there that this is going to be problematic. And the real disappointing thing is there's a lot of people that have no idea this is coming, and it's just going to hit them right from the get-go. And, just they're going to get a letter and they're going to be like, oh my gosh, what do we do? They're not budgeting for it. So the reason we like to talk about it is we want people to be prepared for it. So if you haven't dealt with this and you're in a condo building or you're in a residential home, you're probably going to have to deal with this. So we would rather kind of tell you now and let you be prepared than have our audience be surprised later on.
Yeah, that's a good point. My insurance policy should be coming up soon. I'm sure my rates are going to go up at my home.
Yes.
But I think it's so the reason I like to emphasize condos a little bit more, Greg, like if you live in, I'm not going to move, right? I'm not going to sell my home because my insurance goes up $1,000 or $1,200. But some of these condos, okay, where they're already paying what they feel is high HOA dues, and they're renting a property, okay, for rental income, and their margins are already super tight. A $200 a month difference is significant, or $300 a month is significant for people that are buying these as investments. So I really think it could have a major impact on the condo market once it kind of trickles through the entire market now.
Yeah.
So I would definitely be paying close attention.
Yeah. So once the assessments are levied, right? Like they're there. And so they're official, they're not speculative. And somebody says, okay, well, what are the special assessments? What are the HOA fees? Then that's what's going to happen. Yeah. And in the residential market, and I'm glad we're having this conversation because now you're triggering another thought that I forgot. So we have a mortgage company. And so one of the challenges that we've had with the mortgage company is this, or in the mortgage industry, I should say, is I bring up a buyer, they pre-qualify my buyer. We write a contract. Then the insurance quote comes in a week before closing and the insurance has doubled. And then the agent, then now that the loan originator, the mortgage professional sees what the actual cost of insurance is, they realize that that buyer no longer qualifies to buy that home. That's real, and that it has happened. And that is happening. So one of the things that we're telling our agents is, hey, make sure that, that when you're talking to the mortgage person and they're getting these buyers pre-qualified, make sure that they're factoring in and looking at what that insurance cost has went up to, assuming that it's went up. I haven't seen any insurance that hasn't went up on anything. It doesn't matter if it's a bicycle, it's went up along the Grand Strand. But that's another, these are just areas which causing problems. So now there's an additional few fall throughs that are taking place because their pre-qualification wasn't updated based on new insurance costs.
Yeah. It's definitely something we're keeping a very close eye on.
Yes.
Yeah.
Good. All right. Well, I think one thing that we could offer to everybody that's listening, it's like, look, at least that Abe and I are paying attention to what's going on in the marketplace and how it could impact, our clients or people that are likely going to become clients of ours in the future, or just you all who are just kind of our audience that are watching these videos, whether you're doing it live, social media recorded, maybe you got an email with the video in it and whatnot. You should have confidence that Abe and I are paying attention. And because we're paying attention, we think we can really guide our people and our audience better than most. And that's not to put anyone else down. We're just very confident and committed in our knowledge of the marketplace. So if any of you are having concerns, if you want to know, which direction to go, if you need to talk to an insurance company, I can give you some recommendations. If you need to just understand and you may want to call your HOA company if you are in a condo building, maybe call your HOA and just ask them, hey, what can we expect with the insurance increases that we're hearing about? Because if they're not calling you, then that means that you probably are not up for renewal yet. But so what I would do is I would call them and just ask them, hey, I'm just hearing rumors out there. Insurance costs are going up in all kinds of buildings. Is that going to happen to us? They probably will be glad that you're calling them. They won't want the extra work of taking the call, but they'll probably be glad that they slowly drip this information out, because what a lot of condo buildings are doing is they're getting this information, they're putting it in an email, and they're blasting it out to all the owners at one time. And then they're just getting crushed on calls and people complaining about not knowing about this. So these, in the defense of your HOA, they probably know that something's likely to happen, but until you get close to renewal, they probably have no information to share with you. And so I would think that they're going to share it with you as soon as they can. But be proactive, find out what's going on in your building, go check with them, and then reach out to Abe and I if we can ever do anything. Anything else, Abe?
No, I was just going to say, and it's not specific to just your condo. We're seeing it across the board. Yeah. So it's just across the whole market right now. And
not oceanfront or ocean view, because we're talking golf course. It's my own house. I just had to renew my own house, and it went up. I don't think it doubled, but I know it went up at least 70%. Yeah. All right, Abe. Well, thank you so much, everybody. Please let us know if we can ever help you. We are very committed and take being a resource of real estate for you. We take that very seriously. Thanks, Abe. We'll connect next week.
Yep.